I think in the next 12 to 18 months, the most valuable tech company in the world could be Nvidia.
You think it's going to go past Apple, past Microsoft?
I think it's going to be a race to $4 trillion. And I think you're going to be looking at Apple, Microsoft, Nvidia at that $4 trillion. But if you look at this AI revolution, the godfather of AI, Jensen, and where this is going, we could be looking at the most valuable company in the world will be Nvidia.
How do we get to this $10 trillion? Is Nvidia becoming the most valuable company in the U.S., or do we see these other tech giants moving higher along with it?
Yes, and let me remind you that I had said years ago that NVIDIA would surpass Apple to become the world's most valuable company. Now it's nipping at its heels. What is going on with NVIDIA that is unique from a company like Apple or Microsoft is, as you know, it's fueling the AI infrastructure. This is really important to understand because Hopper architecture drove us to about 90 billion data center revenue. NVIDIA is quickly releasing the next architecture. It's called Blackwell. It will be out before the end of this year. That, we think, can bring us to a $200 billion data center by the end of fiscal year 2026, so that's calendar 2025, meaning that this next cadence of the generation, which is Blackwell, will equal or slightly exceed Hopper. And there's reasons for that, which is that it will empower and enable trillion-plus parameter large language models, which is exactly where big tech is trying to go. So those components altogether equal a very large hardware data center segment. Then we have software coming, which I could talk at length about, but I won't, I'll be brief. And then the third one is automotive. So we have a lot coming. This is very, very early for NVIDIA, and there's a few layers to it.
In a recent interview on CNBC Last Call, Wedbush Securities Dan Ives said that Nvidia, Microsoft, and Apple have started a race to the $4 trillion market cap mark, and it's very likely for Nvidia to win this race, as Ives said that he sees it becoming the world's most valuable tech company in the next 12 to 18 months. On the other hand, the IO Fund's Beth Kindig has been vocal about her bullishness on Nvidia, saying that the company will overtake both Microsoft and Apple and reach $10 trillion in market cap by 2030. In today's video, we'll talk about why these analysts are so bullish on Nvidia and whether the company can actually achieve these ambitious goals or not. Additionally, we'll give you 3 reasons why you should buy Nvidia stock before the stock split in June. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Gene Munster, what say you?
I say it's going to be Apple. Dan, I got so much respect for you, and I'm almost there. But in my case, Apple, I'm looking at the second derivative. And first, got to give NVIDIA all the credit in the world. Jensen is, in fact, the godfather of AI. But the X factor here, Brian's question is, which stock is going to do better over the next year? I still think that that investors are largely in denial about what Apple's AI opportunity is going to be. And I think if you kind of fast forward to what we're going to see in a couple weeks and what that means for the business over the next year, I actually think you'll see better performance from Apple.
That was Gene Munster, managing partner at Deepwater Asset Management, saying that Apple will actually outperform Nvidia in the future. Now, while I agree with some of his opinions, I find it very hard to agree with this one. As of the time of this video, Nvidia's market cap is around $2.8 billion, while Apple's is $2.9 billion, and Nvidia's market cap hasn't been this close to Apple's since 2009. Also, keep in mind that Nvidia wasn't even worth $1 trillion a year ago, so this is substantial growth. Even Dan Ives, a longtime Apple bull, who has a $275 price target on Apple stock, believes that Nvidia will be the world's most valuable tech company soon. A while ago, Apple stock was considered a must-own, but the iPhone maker has underperformed other big tech names in recent months, falling around 2% this year as it struggles with weak iPhone demand and tough competition from Chinese smartphone companies. Additionally, Microsoft overtook Apple as the world's most valuable company earlier this year as it raced ahead of other tech firms due to gains made by early investments in AI across its cloud services. Apple has also been slower in rolling out generative AI than rivals, Microsoft and Google, which are weaving them into products. Now, it looks like Apple is teaming up with OpenAI to bring generative AI features to its upcoming iPhone, But will that be enough for the company to beat Nvidia? Let's find out. Hello everyone, and welcome back to Investocracy. In a recent interview with Fox Business, Mark Tepper, the CEO of wealth management firm Strategic Wealth Partners, said that even though Nvidia stock now trades over $1,000, it's still undervalued. The analyst noted that Nvidia's price/earnings to growth ratio is actually cheap when you look at the growth prospects for AI and machine learning, and said that the company will definitely surpass Apple's market cap by the end of the year. And in my opinion, this isn't too far-fetched. Nvidia's growth is explosive, and there are many reasons why analysts and investors alike are bullish on the company. So, let's get into the 3 reasons why we think Nvidia stock is a buy before the stock splits.
Nvidia and the AI-powered rally showing little sign of slowing today, with the chipmaker hitting an all-time high. The Nasdaq closing above 17,000 for the very first time. Nvidia is up nearly 20% since its earnings report just last week. And check out some of the other names in the chip sector hitting all-time highs today: Micron, NXP Semi, Qualcomm, and Texas Instruments. So, should investors count on Nvidia to keep driving the market higher? Joining us now is FundStrat's head of research and CNBC contributor, Tom Lee. Tom, good to see you. So you're still bullish heading into June. You say there's too little investor confidence, too much cash on the sidelines, but it seems to be flowing in now. So how do you invest and not get burned by volatility?
Well, it has been one of those years where, investors have been hesitant all year, and I think we have had some short pullbacks, but I think the best strategy for investors is to really stick with what's working. And what's working is AI-related names, whether it's NVIDIA or highly correlated stocks like Cadence or Supermicro. The Ozempic-related trades, industrials, financials are doing great, and the Bitcoin and the proxies as well as, I think, a growing small-cap stealth rally. So I think there's still a lot of ways to be invested in this market.
Now, for the first reason why we think Nvidia stock is a buy before it splits, we have the valuation. And spoiler alert, it isn't as expensive as you might think. Part of the reason why so many people have avoided buying the stock despite Nvidia's mind-blowing success is the valuation. But think about it this way: before Nvidia announced its Q1 results, it traded at 35 times forward earnings, and that's actually cheaper than Microsoft, which trades at 36 times forward earnings, yet Nvidia is growing more rapidly. Also, keep in mind that when a company is transforming an industry like Nvidia is, it's hard to value a stock because of so many unknowns. With the transformation that AI is bringing and the massive amount of infrastructure needed to execute that change, Nvidia will continue to succeed, and the stock's valuation becomes a less important factor. The second reason is the company's dividend. Nvidia announced that it will increase its dividend by 150%, and before the bump, it paid shareholders $0.04 per share in a quarterly dividend, equating to a 0.016% yield. That essentially made the dividend a non-factor in earning the stock, but with the increase and the stock split, Nvidia will now pay investors $0.01 per share every quarter for a 0.04% yield. Now, you might be thinking that this is still underwhelming compared to other companies out there, but it's still the foundation for a much larger payment in the future. This is because demand could eventually decrease after a while, and Nvidia can increase its dividend to a meaningful amount when it diverts its cash flows to return capital to shareholders. The thing is, for now, Nvidia sees more value in reinvesting its cash flows into the business rather than paying dividends. And so far, it has been right. Then, for the third reason, we have the incredible growth of the company's largest segment, which is data centers. As you might already know, Nvidia's main products are its GPUs, which handle intense computing workloads, and that's why they're great for training AI models. The global data center market is expected to increase to a valuation of $622 billion by 2030, from $301 billion in 2023, and in March of this year, it was reported that Nvidia had 65% of the data center AI chip market. Therefore, it could definitely capitalize on that expected growth, and if it managed to maintain this share, the company could bring in $404 billion in revenue by 2030. Nvidia is also the king of the AI accelerator market, which tracks the accelerator product revenue. It owns a record 97% market share in the $39 billion AI accelerator card market in 2023, up from 96% in 2022. In other words, Nvidia's business isn't slowing down anytime soon, and CEO Jensen Huang even described this as the next industrial revolution, adding that both companies and countries are now partnering up with Nvidia to shift the trillion-dollar traditional data centers to accelerated computing and build a new type of data center, which he called AI factories, to produce a new commodity, which is AI. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And we want to continue our conversation about the Fed, the several speakers, right? Some things that we've heard about. Neil Kashkari, for example. Seth Cohen's with us, Vice President, Executive Director for the Wealth Alliance, and wanted to get some of your thoughts on the big picture.
Hi, Nicole. Thank you for having me here today. Big thoughts. It's a Nvidia market at the moment. Right now, at least in the short run, it seems that we're trading on momentum and a lot of fear of missing out. We see a lot of this continue to be centered around these Mag 7 stocks that are there. And we just can't discount investor psychology at this time and the interest of them wanting to get into this market and continuing it. And that's where I think we are for right now at this moment in time.
I think there are people who probably had some FOMO and said, look, Nvidia is doing so great. It's been amazing. I want to get in, but it's run up so much. And look, it ran up again and hit new highs today. So even if someone got in late, they still are making money. So what's to say that maybe some of these Magnificent Seven may be good plays for the next few years? I mean, year to date, Nvidia is up 129%.
Yeah, well, rather than talk about for the next few years, I think the kind of market we're in right now is talking about a little bit shorter term. Although that being said, I think with the interest in artificial intelligence so great today and definitely a real thing in the market, we will see this broadening out, and we are seeing it broadening out to other stocks as well. As a matter of fact, any company that mentions the word Nvidia or mentions artificial intelligence seems to go higher right now. I think we see Nvidia, I don't know where we are at this moment in time, but right before I came on air, it was over 1,100, and I think we can easily go higher heading into the split that we're about to see. And I think there are people that want to continue getting into Nvidia as well as getting into some of the other stocks. We've seen AMD as an example, who had a little bit of a scare last week, make up for more than that scare just today, has been doing very well and coming back strong. So I think this fear of missing out is definitely 100% true. What I'd like to see, though, a little bit is this getting a little bit, broadening a little bit more than from where we are at this particular time.
None of the reasons we mentioned has anything to do with the stock split itself, and this is because stock splits only have consequences if investors cannot access fractional shares or trade options, and you can acquire these two with Nvidia. Therefore, there are far better reasons to buy Nvidia stock than a stock split. If you choose to buy now and the stock rises after the split, you'll benefit in the short term, but buying for the company's future AI prospects and growing dividend will be more impactful over the long term. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.